8/16/2011, and what we have here is we have the fourth day of the index is coming up off their original bottoms last Thursday, and that's called a bear trend bull reversal up versus a bull trend bear reversal in different market cycles. With the volatility coming down to notches for the last 3 days, that we had peaked in the fear indicators, the VIX and the VXN. And we have pulled back to certain key levels of support. It will be the due diligence of the SMF MMT to monitor what that blood pressure is there. And they know exactly what I'm talking about. We're going to talk about gap open down, NASDAQ comp, left elbow trades coming into play, starting with Deckers. Got some earnings in here. Retails have been coming out. Not only that, stuff in Germany, hey, their GDP was weaker. There's some worldwide events that were coming out. They got some meetings over there with a couple of people. Dow futures are down 88 handles right now. This is going to be the fourth day of that 2000 calendar 11 52-week low. Where can you find out about it? Once again, is how to measure that. The trade management on every one of these, you got a Netflix, you're in a monthly options expiration, you got a price line, and naturally Google on left elbows. Okay. Now, Urban Outfitters, look at some of them are headline events. Okay. You got Win in there, and you got CME. Of course, Win's going to gap down because some of the retailers aren't as strong as they should be. So there are earnings related and some headlines tied into this gap open down. But nonetheless, the ones that we make markets on, that price line, that Google, that Netflix there, that Apple there, that Sina, Amazon left elbow, Win, well, it has to come down. You'll see the key reversals. The volume management now, the trade volume management within there is that there's two different kinds. There's high computing frequency volume machines that account for 70% of the volume in the tape, 80, 90 at times, versus where human are actually making transactions. Now, when we come down and hit that level to that market maker price action line in your SMF platform, you're going to look for an immediate reversal and getting it back above the half bars, closing above half. You're going to look at where your other key elements turn. You're going to look at the elevation of the bid and ask and the ratio bid and ask, the IR ratio. You're going to look at the other key elements so that you can gauge the left elbow down. Do I need to sell at the top and short the top? Yes. Why? Because if they roll right on up toward that 45 handle in your platform and it starts to deteriorate, mathematically descend, then you know that you're going to break the half bar and you got to make a short. Okay? The trade management on the gap open up list today, which is narrow. You got some news in here. Sorry about the fluorescent colors. You got a couple of things. You got that Geo. You got that bear, SQQ. You don't have a lot of gap open lists. It's very shallow compared to the gap open down. Look, go all the way this way. And the gap open is short-lived. You only got three qualifiers here. GOLD, PPDI, and RLRN. And so the key focus is you want to see where that SQQQ bear is relative to the TQQQ bull. And you want to make sure that you load those in your MMT application now. You want to be paying attention to the VIX and the VXN and the VXO. Those are your fear indicators. We peaked, we pulled back in them. Now, these are bear trend trades at bottom markets. Bear trend bottom markets, 52-week lows. Gap open up on the NASDAQ comp with gap open down and trade management MMTs. Left elbow trades coming into play. That bull, here it is, TQQQ down $1.40. That's the bull. You're going to want to be looking for that left elbow. You're going to be looking that If that bull fails, you can short that bull and you can go long that bear, or you can short that bear and you can go left elbow gap down and go long the bull off the bottom. You have a lot of choices depending on which way they're going to burn. Welcome to the gap open up and the gap open down on the Nasdaq comp in day 4 of a 52-week calendar year low in the dog days of August.